The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour, and glad to have you back on the show here. And let's check out where the markets are at right now. We got the S&P up 6.5 points. Finally decided to break that 1622 barrier from yesterday. Did that in the overnight session, came back down, moved back up, and busted on through it. And being led by the bank and the tech stocks. And just looking over here, we got the NASDAQ up 15. We have the Russell up 2.8. The Dow's up 46 right now, with gold up 24 points on the day. We also have silver is currently moving a decent amount as well. 0.119 on silver and up 0.068 on copper. Oil's up 56 cents. Got corn down 7.5 with soybeans up 5. Looking on over at the euro dollar, up 97 pips after the ECB coming out and saying they have tools left to act if necessary, giving confidence to investors everywhere. And then we got the pound dollar up 76 pips. The Aussie dollar is currently flat on the day from the previous day's session. Euro yen up 80 pips. Pound yen up 55. US Canadian down 20. US yen down 9. With the US franc down 59 pips on the day. And just looking over and checking out our news, what we got going on, what we got coming up. France is having a bank holiday today. And let's see, what do we have? Last night, a few numbers came on out. See, Britain had some retail sales numbers come out at a 7. So let's go ahead and pull up a chart and check that on out. And gold is continuing its nice little rally, as we can see right there. But let me see here. I'll pull this up. And we'll go on over and we'll look at Britain. So, pound dollar had a little announcement come out at 7 p.m. last night. Wasn't necessarily the biggest market mover all in and of itself, but did have, sort of a delayed final impact. But you can see right here, 7 o'clock, nothing happening. Retail sales. The reason it's not as massive of an impact is you don't really have a pre-number to it. So, and also they released it a minute early, but didn't really matter that much, like I said, 7 o'clock right there in the evening. But we'll go over here. We'll check that out, show you. But right here, not just a big thing, but it was down from previous sales. And so you saw a small dip, 5, 10 ticks. I mean, could have not been news as far as you're concerned on that announcement. And then China came out, let's see, at 9:49. So 9:49 p.m. and just to check on the stats, see does it keep up with that pattern? And from what I can see, yep, 10 o'clock, 10:02, 10:07, so released a little earlier than usual, but right around 10 o'clock, China went ahead and released its trade balance, which was positive, and so that just that's positive for obviously the Chinese won there, and so we can go over and look at it again. 9:49 p.m. Did that have an impact on the markets? And go in and go, well, not really. So, it's not a big move. And I don't really usually trade most of the Chinese announcements. I just, like to be aware of them. And until I see some sort of trend emerging that I can take advantage of. But we go over here, we can look at, what about early AM? Well, pound dollar came on out. They had the Halifax report at 3 a.m., and, that started, about an hour, a couple hours before there, the pound dollar really started moving, so it obviously didn't have a big impact all in of itself. Then the euro dollar had their German industrial production report come out at 6. So now we can actually see, the pound waking up, up 1.5 deviations when that report came out. Now, it didn't do it immediately. It obviously took its time, but it definitely, that had the impact on it. And again, that was the German industrial production report coming in much better than expected. And we can go over to the euro dollar to see more, maybe a little bit, more direct impact on that. So you can see right there when the report came out, hey, you got a pop right there, got a full half deviation happening immediately, 33 pips, pulled back, went ahead and moved on up to 1.5 deviations, and been oscillating at that level ever since. And, so as you're trading these things, as you're learning how to trade these straddles and all that, you want that half deviation move minimum. Ideally, you're shooting for a full deviation move from where you're at. So if I'm at half, I'm actually shooting for 1.5 deviations is my ideal target. But, at least half a deviation. And the reason I say at least that is because if it goes up and this doesn't really move, hangs out there, pulls back, I'm probably going to want to get out at break even on the trade. But if it really just takes off, or if I'm in a longer trade, okay, so this, like if you're doing a short-term trade, you don't have a lot of time. I'm in a long-term trade, I have more time, and so I'd literally be targeting that 1.5 deviation from that high impact report. And even though Germany isn't necessarily classified, the German industrial production report is not classified as a high impact report, it does obviously have a high impact, being the one healthy, I guess, nation, depending upon what numbers you're looking at. But the number was, like I said, just way better than expected, and industrial production obviously is very important right now with everything that's going on. Now, Switzerland, they had their CPI number. So let's go on and check out the dollar franc. And right here we can see it moving, and that CPI number came in at worse than expected. It was released at 3:15 a.m. So we can go over here, we can see that we would expect the dollar franc to go down. They decided to knock out some people with stops first before eventually falling, and same thing, 1.5 deviation move. Most of the FX pairs just really chilling out at this point after that massive move that they had earlier from their highs to their lows. And we can go over, let's look at the movement. Oh, by the way, when you're doing this, you're obviously looking to do trail stops. So if you're in and you're waiting to get to a point where you control a stop to a profitable point, you're always waiting on that break below. You could wait until it touches, but ideally I like to wait till it breaks below. But I mean, either one. So it touches this deviation level, trail your stop. It touches it again, okay, and actually closes below it this time. Trail your stop. So it didn't just touch it, it closed below it. That's to me, that's the stronger confirmation. And then it really doesn't close above it again, so you're right there until you get down to the next level. It hasn't closed below it, so I haven't trailed it. But if you want to use a little more, I guess you could call it conservative method. You could move it when, again, it hits the deviation level. The reason I call it conservative is in some ways it's also aggressive. Because you're trailing your stop faster, and you may risk getting stopped out before it has a chance to move further down. So, it's conservative in the sense of you're protecting your profits faster, but it's aggressive in the sense of by doing so, you may be missing out on a lot of additional profits. So, the pig doesn't want to move and the sheep does, so pick one or the other. If it's a big bar, like, this is half, half of a deviation, 25% of a deviation. This is a massive bar. That's where I might make my exception. Same thing right here. This is a huge bar. If it's just an itty bitty bar that just touches it, like, something like this, that would obviously make me think twice about it. But so far, haven't really moved it down. Like I said, somewhere between conservative and aggressive, and I don't know if it's even moderate. But I like to stick to my rules, and I like to close below. And but that can be hard to do. So, at least you can give yourself some leeway if it's a huge move. But anytime you tighten that stop tighter than you normally tighten it, then you're just, again, you're risking cutting your profits short. And, one thing I was talking to some traders this morning about, cutting your losses short. And there's two ways that you do that, okay? Obviously, there's stop losses, but the other one is filtering your entries. And filtering entries is just a huge part in any kind of trading system that you use. And you really need to have some filters for your entries. Not just your, like, what do I do when I go long, but, on price action, when would I maybe avoid a trade? And when would I wait for it to move to a certain point? And so, I like to filter my entries. And because if I can avoid a lot of my losses, then I'm able to obviously have less, which cuts my losses short. But right there, we got the dollar franc. Let's go over and we'll look at, and by the way, we do have oil inventory report coming out a little bit later today. That's going to come out at 10:30. So, already came out, sorry. It came out at 10:30. And the oil inventory report came in at 0.2 million on an expectation of 2.1 million, meaning inventory was lower than expected. And, usually lower than expected means prices rise, right? Because less inventory, low supply, higher price. So that, that would be the expected correlation, that the market would rise after a lower than expected inventory report. It wasn't just, massively lower, but I mean, it was, a couple million lower than they expected it to be. And so you can see right here, report came out, and it's one of these things that this is why I like trading Nadex, because when stuff like this happens, it blows me away. Like I said, inventory drops, and price should be rising, but when the report comes out, what does it do? It drops. So fundamentally, you can't trade that. And that's whenever I talk about trading fundamentals, trading news, I'm not talking about trading in the direction of the news. I'm talking about trading doing a straddle before the news, so if it goes either way. And if I see this happen, if I go and I do a straddle on oil and it falls down, I look over and I see the oil inventory report came in worse than expected, meaning oil should rise in price, I'm going to close that as soon as I can for break even on the short side. And ideally, before oil closes, it'll come on back up on the long side, might make some money as well on that side. If that does, then hey, things worked out. But whenever the direction goes opposite the news on a straddle, I'm looking to get out because it doesn't make sense, and I want to trade things that make sense. And because usually when it goes the opposite news, it doesn't go really far. It'll just drop and chop, and or it'll take its sweet little time and fly up. But more often than not, if it goes the opposite direction of the news, it'll drop and chop, and there's really no benefit to being in. Now, what I will see happen is it'll spike up like it should have, and then it'll pull back. And then it'll usually rise back up to that same level. When that happens, that's good because it lined up with the news, went in the direction, and went up. Hey, I could sell out of my long, pulls back. I get another chance to sell out of my long, or even another chance at re-entry. So that's one of my favorite ways to trade if it'll do that initial spike, is doing that second entry versus the first entry. So if I do want to trade with the news, then I will let the report come out, make sure the spike that happens right out the news lines up with the report. If it pulls back, then I could look at getting back in on that trade. Basically pulls back to where it was right before the news, and looking to get out at the spike high of the news. So that'd be my same exit. And that's one method for trading the news. So there's a lot of different ways to trade it. But in all those cases, I'm going to be using low-risk spreads that I can't be stopped out of. And I trade those over on Nadex. And if you want to learn more about that, we're going to be in New England. So if you're in the New England area, definitely hop on TFNN and register for that right now so you save your spot. But it's at tfnn.com. Click on that Boston Free Live Workshop right there and fill in the form. And Dan Cook from Nadex is going to be out there. Tommy O'Brien's going to be out there. He's going to be going through identifying the trade, talking about setting up trades. And I'm going to go through binaries and the spreads. I'm going to go through diagnostic trading, deviation levels, statistics, like how I put all that stuff together to be a step ahead. And we're going to go through risk and money management. And, one of the most, really probably next to, sanity, psychology in your head, risk and money management, I would say, is the second most important thing. Because you can have all the risk and money management you want, but if you're crazy, you ain't going to follow it. But we're going to go through all that. So make sure to register for that right now, and make sure you save your seat for you and anybody else that's going with you. Each person needs to register so a seat's saved for them. I'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so just reminding you again, make sure you hop on TFNN.com, register for that Boston workshop. We're going to be on out there this weekend, this Saturday, 4 hours, and it's going, straight into it, getting your questions answered, piece by piece, everything you need to know. And it will be happening at the Boston Marriott Burlington, right there in Burlington. So look forward to seeing you out there. And again, giving away over $3,000. Nadex is giving away over $3,000 in prizes. Silver, subscriptions to Tommy and I's, services here on TFNN. Books that Tommy's written, just a lot of really cool stuff being given away. We'll give that up right at the end. We'll be calling out people. So you need to be registered in order to be on the list and be present in order to be able to win the prizes. All right, so what about that? You're all excited. You're ready to go. What are you going to do now? How can you get ready for the upcoming workshop? All right, so what you need to do is you need to go over here and scroll down to the Diagnostic Box Spread Analyzer. Click on that. Fill in the form. As soon as you fill that in, you're going to get immediate access to tutorials on the spreads, tutorials on the binaries. You're going to get access to deviation levels. You're going to get access to the live spread scanner that I use to place all my spread trades. And we're always adding more and more to it. So here in the next 6 weeks, we're going to have the deviation levels for stocks and ETFs and about 40 futures pairs. So pretty excited about that. That's coming on in. It'll be at 3,000 stocks and ETFs and indexes. So basically all the ones that are optionable. And we also have a binary scanner coming on up as well. So that's going to be pretty exciting. And I'm actually running through the test this week on it to get it launched and out there. I'll do a screenshot over here from my other screen, and I'll show you sort of a little sneak preview of what that's going to look like. But right here, you can actually see, so we got the binary scanner now that's going to be coming up in here. And then you'll be able to choose from all the, Nadex markets right here. And we're going to add in more filters. We have a few filters right now. We're going to add in some more filters. And then we're also going to have a little box right here that says, what will the spread or the binary be worth if it moves this much? And then these will be turned into buy and sell buttons. So you'll actually be able to click here and open a ticket in the Nadex scanner. So and just by doing this, it'll narrow it down from, literally, you could have, I want to say 140 different binaries available at one time. So you'll be able to narrow this down really fast to the few that you want to see, and just make life a lot easier for you. So excited about that. Can't wait until it's up and working, and we'll hope to release round 1 early next week. And then we'll be adding in more and more of the filters, and just step by step adding in more pieces until we get it all done. Now, looking at that, this is also, by the way, where you get access to the deviations. So you can see right here, click here to view the current day's deviations. And it posts these every night about 8:30 Eastern time. And they're put up here on the chart so you can look at them and you can see what the deviation levels are. We have them for the Nadex markets, we have them for Forex, and we also have them for futures markets as well. So no matter what you're trading, very helpful, very accurate. And basically, think pivot levels meet standard deviation meet options. That's a way to put it. Basically, it's the expected movement built into options pricing. We extract that, we use a deviation formula, and then we end up plotting the levels at which the market will hesitate, pause, or reverse. Hesitate, pause, or reverse. And so by doing that, we actually get the market's expectations of how far the market's going to move. And those are the levels where we're going to want to tighten our stops. That's the levels where we expect the market to, bounce, move back, things like that. And, you can see over time, these things sort of go up, and there's one deviation. That's what we expect a majority of the time, one deviation. So it puts basically all of your expectations in check, because we as traders always want the market to go to the moon. But we need something to help us manage that profit on the way there. And so as you can see right here, like I'm always talking about, how would you have managed oil on a 2 deviation move? That's a huge move. If you're in oil and you went in and you got on this, so dip back, pull in, buy, that's how I always enter. So basically, I enter on the previous bars, break out of the high after a pullback right there. So I buy, and if you're interested in an oil contract, I'm not even talking about Nadex right now. Now you could do Nadex, you could do like 10 contracts. But if you're in an oil contract, CL, and this thing goes from 91.70, and it's all the way up here, okay, at 94.22. Do you know what that means? Especially if you're making the mistake of looking at your P&L while you're trading. 252, okay, 252 pips at $10 each. You're up $2,500 in a single trade. That sounds awesome looking backwards, but the emotional, do I take it now? Do I take it now? What about this? Do I take it now? That could have cost you literally $1,000 by taking it off too early. So, how would you have done it? I'll show you how you would have trailed your stop right here on oil to ride that move all the way up to the end of the day. We'll be back right after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So one of the challenges, and it's funny, because we're just always trying to battle, not losing, managing our risk, timing the trade, putting all those pieces together, which are all absolutely essential and important requirements. But then how are we going to manage our profit? Because if you don't know how you're going to manage your profit, and I'm not just talking about simply a target's good, and you want a target. Because, you want to go, do I even think this thing has a realistic chance of having a 1-to-1 or better, risk-reward ratio? That's great to have targets, and I think you should. That's why deviation levels to me are targets. I don't go at certain levels. I'm like, okay, I don't really know how much more of a target I have left. But you have targets, but you want to manage your profits because one of the great things is sometimes your target was way underestimating how far the market was going to move. So if my target on most days is 1 deviation, and I just get out, I gave up a lot of money. So, and people go, well, you don't go broke taking a profit. Well, yeah, you do, because if you if you lose $100 and you lose and make $10 when you win, you can win 9 times out of 10 and still be down. So you can take a lot of profits, but be down. So you don't want to take your profits too soon. But looking at this, how much money would you have given up? Just assume, let's say we got out at 94, and we'll go through, we'll trail it out. We'll see exactly how it would have worked out with the plan I'm going to show you here. But if you would have got out just at, 92.64, one deviation, that's a $1.36, okay? Well, that didn't sound like a whole lot until you realize that that's actually worth $1,360 of giving up profit on one CL contract. So how could you have managed your profit? Because it is emotionally very difficult to manage it just by going, do I think it's gone far enough? Every little tick against you is going to make you want to get out. And you want to protect that. So how can you do that? Well, there's two methods that I've been teaching out. One is, of course, when you get this entry. Now, I always buy, of course, when the market pulls back on that breakout right there. So if this was my fib line I was looking to buy out, I'd wait for it to break the previous bar's high at least before I did that. So right there, and I just draw a line from high to the high that on the bar that broke out of it. Then I'm going to go over here and down on my RSI. Then I'll draw a line to those 2 points as well, and I'll see if I have divergence. If I don't, no trailing stop. So no divergence, no trailing stop on that move. Okay, so right now I'm just leaving it alone. Now, if I wanted to, since it closed above 0.7, and it's actually broken the high, I can go ahead and move my stop. So I'll move my stop right here. 5 ticks above this. Now I had my stop 5 ticks below the low since the pullback right there, because that's where the market stopped filling sell orders. So I moved it up. Basically, my risk is very, very low right now. I have profit, but I've reduced my risk because my goal is to let profits run. Okay, I got to let my profits run if I'm really going to make money. And I mean, I'm always going to get big trades, but I'm going to give them room to breathe a little bit. And so my stop's right there. Now the market goes up, and man, I mean that's a decent chunk of change if you're looking at your DOM, which that's why I don't like looking at P&L. But that's right there. That's $300 fluctuating right there. Comes down, closes above. Notice it closes above the deviation level. Now I'm able to move my stop up again. Now I'm really sitting pretty because I got in right here. Okay, my stop's right here, and got in at around 91.70. My stop's right there around 92.40. So that's $700 in profit. No matter what happens, locked in. Obviously, I can live with that. And my initial risk on the trade would have been right around, let's see here, 91.70, 90, about $450. So I'm up well over 1-to-1 at this point. It's still moving, and that's within the 1 deviation mark. So now it's still going on up, and now it went up a lot. Okay, I mean like a lot right here. This is a decent amount of money. It's 440, 360. That's $700-800 right there. So between those two deviation levels, so 93.44 to 92.64. Yeah, so that'd be $800. $800. That's a lot of money that you're going to be filling that, and it pulls way back down. And you're just like, man, if this thing just moves back up to where it was at, I'll get out. Or maybe I should just move my stop now and just take it. So, I mean, those are all the things that you're wrestling with as you're trading. Well, it moves on up. It doesn't close above the deviation. Now, like I said earlier, if you want to, you could go ahead and tighten the stop when it hits 1. So it hits the deviation. So if you want to move it up a little bit further, in this case, it wouldn't make a big deal. But I like to be a big bar if I'm going to do that, okay? But either way, I mean, you could tighten it up when it hits it. Best method is when it closes above it. But again, that can be hard. So, but right there, we moved it up a little bit. Didn't make a big difference on this at all. It's only, another $50 or $100 that we're locking in. Thing pulls back, way back. And then, I mean, doesn't hit this stop if you moved it. Doesn't hit this stop if you just followed the close rule. Follows and closes above. So now I can move my stop up further. So now I got it up here. 5 ticks below this low right here. So pulls on back, closes above there. There's my stop. Now I've walked in quite a bit of additional money. So my original stop at 92.40 on up here to 93.04. So that's another $600 locked in on that trade. And right here, now if you're trading, usually I like to get out, oil a lot of times I'm not going to trade it past the pit hours. So, which is going to be right at 2:30. 225, 230 when oil closes on down. So I'm going to be looking to hop on out anyway at the close. So this bar closes on down right here. And so really the trade would have got you in and would have moved you at the close. Now I'll show you, what if the market didn't close? What would you have done? Okay, let's just, drop the whole close thing. You're trading globebacks, that type thing. Okay? But, so right there, I mean, you're doing pretty well. You're at 91.80, and if you got out like right there at the close, you're looking at 94. So, 91.80 minus 94, or vice versa. Then you're talking about $2,200 in profit. So, is there anywhere else you could have moved it? Did you have a divergence that you could have taken advantage of? Well, pretty much at this time, since it closed above a deviation, it didn't matter. But if you did, it also would have been just another confirmation to tighten your stop. And right there from that high of that bar, pull back to the breakout of that high, yeah, we had, another divergence. All right, so there's a way to trail the stop. Now, let's say you want to trail it a little bit tighter. There's a couple things you could do. One is if that divergence continues. Okay? So let me show you what I mean. If the divergence goes from here to here, and then let's measure the same point on the RSI from that point on to, this point. Well, now I can trail it again. Okay, because that divergence is continuing. And does it continue again? Okay, well, I know it continued. At least I know there's a new high. So as long as there's a new high, there's a possible new RSI divergence. So right there. And then go a little bit lower. And, yep, divergence is still down. So I'm not looking for peak to value. I'm looking from bar to bar. So from peak to bar. So right there, I can trail it again. Well, what else just happened? I also had, what? It hit the deviation level, which is, like I said, a method where you can trail the stop when it hits it. Not necessarily my preferred choice. But I also had RSI divergence. So I had two reasons now. One very strong, one, mediocre to do it. Ideally, I'm waiting for it to close above. And it doesn't, and it finally does come back down. If you you're just staying in this oil contract. Finally comes back down before popping. You have a whole new day. But you're able to get in there, and then whatever time you got out. That's why I try to base it on actual market close times because it's more realistic on when we'd exit. But that shows you how you could have trailed that thing at pretty much almost to the high of the day. 93, we'll go 5 ticks below this to be exact. So we got 5 ticks right here. So it'd be 93.80. And entry would be 3 ticks above. So 93.80 minus 91.69. 93.8 minus 91.69. That gives us $2.11. That's at $100 a point, $10 a tick. That's $2,110. It's a very simple entry. But again, what I'm focusing on right now is just teaching you a very simple trailing stop method. And you got the RSI divergence, which is very helpful. So when you get those dips and pullbacks, and I mean they happen all over the place, so it's pretty cool. But they'll happen more often than you expect them to. But I mean, even like right here, you got a new high right there, and then there's a divergence right there. So same point. Now you also had the bar close, above, but you got RSI divergence, so that closes right there. That gives you a tighter trailing stop. And, this one we didn't have one. So we can even just delete it off the screen, didn't matter. But on this one we had one, on this one we had one right here. So we were able to, trail our stop multiple times due to RSI, and we were able to trail our stops multiple times due to deviation levels, using the two back and forth, allowing us to take advantage of the market movement when it's flying, but giving room to let profits run. And what I will tell you is the RSI divergence, I'm very big on doing it when I get that pullback and breakout. I'm very aware that if I trail it on every single higher bar like this, and when as long as divergence continues down there at RSI where this is angling up and this is angling down, I do understand I'm more asking to be kicked out sooner. So when you do that, especially if you just get like minor chop, you're really asking to just get kicked out of the trade really quick before it takes off. So now, if I'm further up in a trade, then this is basically a way to start trailing faster, to help me lock in some of those profits just in case. So, but if I start doing like RSI divergence in a time like this, well, you can see it's just gonna knock you out before you even get going. But hopefully that'll help a few of you out, give you some ideas, and I mean you can just go through on anything and apply this. It's pretty cool. I mean, what Apple's been moving, right? So now the divergence rule. So each time the divergence happens, you're moving it up. So if I pull up an Apple chart, we go on and get in here, pull back, move up. So right here, okay, pull back, breakout, go right down here, okay, and go, do I have divergence? So between the two bars. If I don't trail the stop yet, okay? So do I have divergence right there? And we'll be having this at deviations on Apple and everything else really soon. Can't wait. So no divergence. What about here? Because it's a little bit higher. I mean, it's small, but it's a little bit higher. We can go on over here. Do I have divergence? Yes. So I control my stop. So it's very small, but like I said, you can still do it as long as there is divergence there, and that's helping you just move that stop up higher and higher and higher on whatever move you're on. So if you're going in and you're bullish on Apple, you get this pullback, takes off, and go in there and get a few ticks in, a few pips, whatever, cents. So right there. And, I mean, you'd have a decent stop. So, I mean, it'd be a pretty hefty stop loss. You'd have to be down here below the low because it's the low on the pullback. But you're expecting a move, from at least here to this point. Okay? So that's where you're expecting the move to happen at a minimum. And then, so you're going right here and go, okay, again, is there RSI divergence on this one? So we go over here and go right here to this bar. Yes. So now I'm immediately able, and that's something you're not going to be able to, you're going to be very happy you're doing. I'm able to move it on up to the bar that had RSI. And then another RSI kicks in, right, because we get another high. So I can go right here. Look at this. Right there. And then go right here. Draw it to the same bar down here on RSI, right there. Still got the divergence. Right here. So now that I still have that divergence, boom, awesome. Now I can really lock in some profits. That reduced my risk. That has now locked in my profits. And no RSI divergence there, so I can't do anything. Do have an RSI divergence here. Now I can lock in, more of my profits. I can move it on up. So it's right below this. And so it's helped me manage my stops. And I mean, you have to go in low, so 68. What are we at right now? You're out. You're done. Not a bad Apple trade. One trade. Simple, in, done, out. P&L on the trade. Let's see here. Take a little ruler. Go in a few ticks above. Go in about 5 ticks below. About 28, I think. Right. Yeah. And trying to just get it exact. Yeah, there we go. All right. So basically looking at about, what was that, $3.66? So not too shabby for one trade. Took you a couple hours. So put it on, done. After market opened, closed out. It's over. And, that's just, that's a quick, very highlight summary of how I trade. But hopefully it helps you see a way to trail your stops on your positions. Because it's so easy to hold on because you want to make $6, $7, $8, share. And then you see it as, fly back down and you give it all back up. So you want to let your profits run while protecting them at the same time. And that can be easier said than done unless you have a very objective method of how you're going to let your profits run. It can't just be, one of the most frustrating things to me as a trader, hearing that, but not being taught it. It's like, okay, yeah, I'm supposed to let them run. But every time I let them run, they fall back and hit me in the face, So they disappear. Because it's almost like let your profits run, which gives way to greed. Cut your losses short, which just feeds the sheep. So how do I do it? You got to have very mechanical ways to do it. And it doesn't mean you leave out market style, but your P&L management should be very, very mechanical in the process, not P&L emotion-based. We'll be right back after this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And just looking through and wrapping things up, seeing what we got going on in the news. And let's see here. What do you have coming up that you need to be aware of? So we had the 10-year bond auction that came in. The yield came in a little, basically a little higher than before. So yields up to 1.81 right there. And then looking on over the employment change. I'm just trying to see if there's anything else in that that's bid cover ratio 1.81 to 2.7. So, and yields were flat, and then they popped up a little bit right as the auction was coming on up. Looking on over tonight, we got employment change, unemployment rate over on the Aussie dollar. So that is usually a decently high impactful report. So that would be one you'd want to news trade and check it out. So straddles on Nadex, and use the scanner to help you find what spreads to straddle about 15 to 30 minutes before the report comes out. So about 9 o'clock Eastern, you're going to be getting ready for that trade. Look at the 10 o'clock, look at the 11 o'clock spread expirations. And then what do we got going on tomorrow? We got France is on holiday. Germany is on holiday. Switzerland is on holiday. So just be aware of that. Got quite a few markets right there. Let's see, Ascension Day in Switzerland. We got Ascension Day in France, and we have Ascension Day in Germany. That will lower it, but I'm trying to see if the target system's down. Doesn't seem that the target system is going to be down during this time. So that's basically what runs a lot of the FX transactions between the banks. So, but the banks will be closed in those 3 countries. Be aware of that. And what else do we have? Manufacturing production coming out of Britain at 4:30. High impact report. Followed up with the official asset purchase and bank rate with their MPC statement at 7 a.m. 4:30 report will be slightly muted due to the interest rate coming out at 7. So even if there is a decent impact, it'll probably pull back to about where it was before the announcement came out. And ways to trade that. You could do an iron butterfly that expires at, say, 7 before the news, and then put on a straddle at 7 when the news happens. And I've went over those in my past shows, and if you ever want to know about them, just call in. I'll be glad to go over them with you in one of my future shows. And then, let's see here, what else do we got? Unemployment claims, been a medium impact. Hasn't been a massive impact report lately. So I'm not expecting massive movements off the unemployment claims, 8:30 Eastern time there. So I wouldn't be surprised to see that pretty flat. And then going on in, we're going to have the monetary policy statement tomorrow night, 9:30 for Australia, and current account of Japan. Usually not a massive mover overall for the Japanese market there. We got the RBA policy statement. And then following on through to Friday, we're going to go in and we're going to look at G7 meetings happening all day, day 1 on Friday. And then USD CAD, 8:30 a.m. for the employment change and unemployment rate. And Bernanke is going to do a small speech, but it's not a major speech at 9:30. But USD CAD is going to be your trade on Friday morning for news. Aussie dollar tomorrow night. Pound dollar, like I said, maybe like an iron butterfly at 4:30 and a straddle at 7, along with unemployment claims. Potentially either, and you might want to do a what I call a strangled butterfly or straddle butterflies, where you go and you buy a straddle and you sell a butterfly to pay for it. So that way, if it's flat, no big deal. But if it takes off, you can actually make a decent profit. And that wraps up the news for the week. And where are the markets sitting at right now? Everything's just hanging out at its highs over there on the indices. We got the S&P up 5.5 points, the Nasdaq up 14. Russell is up 1, Dow is up 42. And not much movement across the board at this point. Everything's quieting down. All right, well, everybody have a great day, and I will talk to you tomorrow.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.